Hello and welcome to World Talks here on TVP World. I'm your host, Maciej Bilowski. Poland's economy is flying high. GDP is up, inflation is down, and unemployment remains among the lowest in the EU. But beneath the surface, cracks are starting to appear. From the rising deficit to demographics and lackluster R&D spending, just to name a few. Joining me here today to discuss the Polish economy is Geoff Gottlieb, the Senior Regional Representative for Central, Eastern, and Southeastern Europe at the IMF. Geoff, welcome. It's a pleasure to have you here.
Thank you for having me.
So we're seeing, Geoff, that over the past 30 years, Poland has truly had a remarkable growth achievement. Do you expect this momentum to continue in light of everything that's been occurring? And where do you see the Polish economy within the next 5 to 10 years?
Well, that's exactly right, Maciej. The track record in Poland is extraordinary. So since 2019, the Polish economy has risen 27% in terms of average incomes. If you compare that to Romania, that's 15%. If you compare it to Hungary, that's 11%. If you compare it to Czech Republic, it's 5%. So the amount of growth that has happened during this period is just really to be admired. Now, if you think about going forward, in the next year, we are not particularly worried about growth. We expect it to remain strong. And there's really two main reasons for that. One is that Poland is going to receive a substantial influx of funds from Europe that will support investment. And then the other is that the monetary policy has started cutting rates. And so you're starting to see a pickup in demand for credit, both from households and firms. I think things look less certain after next year on the kind of 3 to 6 year time frame. And that's really going to depend on what happens in terms of reforms of the economy. It's really important that Poland does not stand still and continues to push reforms that increase the labor supply and labor productivity as we move forward. So that is what we see for after next year.
Absolutely. So looking at some of the risks that have been cropping up in recent years, we see that the budget deficit is a growing concern. A lot of economists have flagged this as a potential red flag for the economy. The deficit, which is now approaching 7% of GDP, is now the second highest in the EU when measured as a share of the economy. Is this sustainable, in your opinion, and how could this affect the Polish economy and Poland's creditworthiness if left unchecked?
Well, let's start with the positives. The positives are that debt is still not that high. So it started from quite low levels. It was 50% of GDP just a couple years ago. The concern is that it's now risen 5% of GDP per year for the last 2 years. So debt is rising at a very fast pace because of the deficit. And a deficit, as you say, of 7%, it only really makes sense in two cases. One is where the economy is incredibly weak, like a recession, or because you're spending an enormous amount of money on investment, public investment, which raises future GDP. Neither of those are the case here. This is really a substantial increase in public expenditure that is really driven by current spending. It's really not either of these cases. The economy is strong. So our worry is that the deficit is too large for the strength of the economy and the type of spending. And so the question really is up to the Polish people. If they want to sustain these expenditure levels, something has to change on the tax side. If not, something has to change on the spending level. And that conversation hasn't clearly started in Poland yet. And it's really important to emphasize that the size of the state has changed incredibly quickly in Poland. Just 6 years ago, since 2021, public spending has increased by 6% of GDP. Since 2019, it's by 9% of GDP. So today, Poland spends as much as Germany and Italy. It spends as an advanced economy, but it raises taxes like an emerging market. And something has to change. It's not that we expect a crisis imminently, but society needs to start discussing the trade-offs that would bring the deficit down to a better level.
And now that you mentioned taxes, Geoff, the IMF, your institution, of course, just released its Article 4 statement on the Polish economy. And in that report, they mention steps that the Polish government could take to increase tax efficiency, namely the value-added tax and the personal income tax. Do you agree with some of the statements that were issued in that report?
Yeah. So So on the revenue side, so say that society as a whole wants to keep these expenditure levels, then something has to change on the revenue side. And I'd really focus first on the personal income tax. So if you look in every different revenue category, like corporate income tax, social security contributions, value-added tax, Poland raises a similar amount of money as advanced Western Europe. The key area where there is a big difference is the personal income tax. Poland collects 5% of GDP less than advanced Europe in taxes and personal income tax. So something has to change there. There's a perception that personal income tax is very high in Poland. The reality is the rates are quite low. So that is the start. The second area where I'd really focus, less than VAT, is more on real estate. There's a strong desire to hold real estate in Poland. Our view is that there's probably excessive holdings of real estate relative to what is ideal. People hold multiple properties in some cases as a means of saving. We think the tax preferences for real estate should probably change and encourage households to hold other types of assets that benefit the economy.
I see. Moving on to another major long-term risk that the Polish economy could face in the coming decades is the demographic issue. And certainly Poland is not alone in this regard. We see all throughout Europe we have falling birth rates, particularly in this region of Europe. How can we expect the Polish economy to continue growing given a shrinking labor force and a declining population in the coming decades? Do you see continued growth even amidst that environment?
Well, let's first just go back in history slightly. If you go back about 10 years, there was real concerns about what was happening on demographics. And since end 2013, indeed, the Polish workforce has fallen by 200,000 people because of demographics. But something else happened, and that is the immigration from Ukraine. So while Polish members of the workforce fell by 200,000 since then, Ukrainians increased by 800,000 during the same period. So the Ukrainian immigrants more than offset the demographic impact over the last 10 years and delayed the future demographic impact, put it into future. So thus far, immigration has taken care of this problem. If you look forward, this problem is not going away. The demographics will continue to deteriorate over the next 25 years. And there's really two core choices on how to deal with that. The first is increasing the retirement age. This is incredibly unpopular in Poland, but it is a highly reliable way of improving the labor force, and it can be done in an exceptionally gradual way, such that it is not particularly noticeable to the average person. So this is one. The second one is continuing immigration, provided it is very well integrated. And here I really want to stick to compliment Poland on how well the Ukrainian immigrants have been integrated. If you look, 75% of Ukrainians of working age that are here have jobs. That compares to 30 to 40% in France and Germany. So this is something that has gone very well. But going forward, if those options do not continue, if you don't have an increase in the retirement age or an increase in immigration, you're going to have to find other ways of increasing the workforce, and it's just not easy. It will otherwise be a big drain on GDP going forward.
Mm-hmm. Switching over to the micro side of the economy, the rather business or enterprise level of things, are there certain areas where Poland may lag behind compared to its EU peers? Factors like research and development, innovation, capital spending, especially domestic capital investment. What is your opinion on that specifically?
Right. So let me focus on the innovation part of what you just mentioned. We often look at comparisons between Poland and South Korea, because South Korea is about 10 years ahead of Poland on the income convergence side. And at every point when you compare when South Korea had the same level of income as Poland, South Korea had substantially more investment in innovation. And no matter how you measure that, if you measure it by R&D spending, if you measure it by patents, that was just much more a focus of that growth model. Poland, by contrast, has focused much more on the innovation of others, the transfer of technology. So Poland has done very well with this strategy, but we think that gradually needs to change. So it's not so much that Poland does poorly on it relative to other Central Europeans, it's that Poland does poorly on it relative to the countries that have converged before it. So I think the government is making some good first steps in trying to encourage that. There was a big announcement about a program called Innovate Poland, which tries to move institutional savings towards alternative investment vehicles that gives more money to the firms that do not have access to bank loans. So things are moving in the right direction, but it just needs to continue.
Thank you so much. And just to be really quick, since we're running out of time, on the flip side, what would you say are certain factors where the Polish economy excels at relative to its EU peers? Again, looking at the micro or the enterprise level.
Yeah, unequivocally the area is labor productivity. So labor productivity growth has averaged over 3% for an extremely long time. And that's how you continue to have wage gains that don't cause a loss of competitiveness. So that's the area that has generally gone very well for Poland. It's just that in the most recent years, prices of Polish labor have been rising very quickly. They rose 20% faster than productivity in the last couple of years, and that's the area where Poland will need to be. It's still competitive, but the buffer against other countries, competitor countries, has gotten smaller.
Thank you so much for that. And finally, since we have about 2 minutes left, when we look at the structure of the Polish economy, we see that it's an economy really built on small and medium-sized enterprises. But at the same time, larger companies, think Fortune 500 or Forbes Global 2000, which tend to be some of the biggest drivers of innovation in the global economy, are really absent if you look at homegrown companies. So what can be done from a policy perspective to kind of encourage growth in those larger enterprises and to prop up Polish companies to attain that level?
So I'm really glad you asked that. So it's exactly right. Poland has done very well on exports, but a lot of them are foreign-owned companies, and Polish companies have not really scaled into pan-European brands. And this is where we think the agenda at the level of the European Union is really critical. In Poland, people focus on the EU in terms of EU funds, like cohesion funds, but really there is a whole nother part of the reform agenda that relates to completing the single market, so that there's a single market for energy, a single market for labor, a single market for capital. Those are the factors that we think are critical for Polish firms scaling. So that gives a much bigger market than Polish firms otherwise would have. This is why we're really encouraging Poland to be a leader on reforms at the EU level. We think it'll strengthen Poland and is critical to the final convergence.
Geoff Gottlieb from the IMF, thank you so much for being here. Thank you for your input.
Thanks a lot.
That's all for today's edition of World Talks. Stay tuned for more on TVP World. Goodbye.